I'm Sarah Borkson-Keeter with NAREITsREIT.com. Joining me today to talk about property values is Brad Case, NAREIT Senior Vice President for Research and Industry Information. So Brad, why don't we start off by talking about property values in April? What sorts of trends were you seeing?
Property values dipped slightly in April. They're down, we estimate that overall property values were down by 0.32% nationwide during the month of April. We measure property values using the FTSE NAREIT PureProperty Index series, and that covers the core and near core property types of apartments, healthcare properties, hotels, industrial facilities, office buildings, and retail properties. So April was a little bit of a soft month with property values down very slightly. One of the great things about the PureProperty Index series is it enables us to target different parts of the market, not just by property type, but also geographically. And so what we saw during April was that property values were a little bit stronger in the Midwest and East regions of the country. Each of them saw property values go up in the 0.6 to 0.7% range, whereas in the South and the West, property values were a little bit weaker. They went down by a little bit less than 1.5% in the South region and about 1.1% in the West region.
Now, there have been broader concerns about the economy. Do you think April's numbers are pointing to any sort of slump?
No, not at all. Actually, if you look at the numbers since the beginning of the year, they're very strong. Nationwide, all property types, the PureProperty Index series suggests that property values have gone up by nearly 3% over the first 4 months of the year, which of course translates to about a 9% pace for the year as a whole. If the current rate sustains itself. And I think there's a lot of reason to believe that the current rate of property value increase will sustain itself. If you look at the macroeconomic, the underlying performance fundamentals of REIT-owned properties, they're very strong. Occupancy rates are very high, rent growth is very strong, construction is still very low. There's a lot of people who have looked at the pace of new construction and seen that on a percentage basis it's been strong. But they have to keep in mind that we're starting from such a low base that we're not even back to normal levels of new construction. And so a real estate market cycle is in danger of ending when construction gets way above its normal pace. We're still below that. And so I think it's likely that we'll see continued strong occupancy, strong rent growth as the restrained new construction combines with continued strong demand, although not overly strong growth in demand, and you see that when you look at the earnings numbers that REITs are reporting. They're reporting very strong growth in funds from operation, the most important indicator of operating performance at the company level. So we have seen strong growth in property values since the beginning of the year, notwithstanding the flat. The fairly flat numbers in April, and I think that's likely to continue.
And Brad, what trends are you seeing in terms of income from investments?
Well, income is typically very strong as well as very steady for all income producing properties, including those owned by REITs. And so when you take income into account, add that to capital appreciation, total returns during the first 4 months of 2016 have been very strong, averaging nationwide all property types about 4.25%. Again, about close to 13% on an annualized basis if that pace holds up. Again, there are some regional differences. Total returns have been especially strong in the South region of the country, up nearly 6% year to date. A little bit, also very strong in the Midwest and East regions at about 5% and 4% on average, and in the West region, nearly 2%. So all parts of the real estate market really reflecting the strength in the overall real estate market. That the gains from that are flowing through not just in the form of higher property values, but also in the form of strong income for REIT investors.
Thank you, Brad.
It's a pleasure.
And for more news on property values and other real estate information, be sure to visit REIT.com.